Hello, everyone, and welcome back to Wise Credit Management. This is Lesson 2, Read and Understand Your Credit Report. In this lesson, obviously, we're going to go over how you can get your credit report. We're going to go over how to go to annualcreditreport.com and get all three of your credit reports. Then we're going to show you how to monitor your credit reports using apps like Experian and Credit Karma for free. Then finally, we're going to go over how to get your mortgage FICO scores for $30. In other words, I strongly suggest that if you're going to go out and buy a house, you should know exactly where you stand with your mortgage FICO scores. So let's get started. And hey, if this is your first time joining us, we're so happy to have you here. This is just a short introduction and a review of the Essentials class. We have several pretty simple goals for the class. Mainly, I want you to understand the principles of wise credit management. My name is Jason Johnson, and while I was an active real estate professional, I focused on first-time homebuyers, many of whom needed help with their credit. Then one day, I believe that God put it on my heart to develop the program that I wish existed for people with credit problems. I know this class isn't the most entertaining, but I believe that it will be the most informative for you. It's completely free to students. It's the most comprehensive program that I know of, and if you pay attention and learn the material, you will be able to build and maintain a good credit score to help you accomplish your goals. I want you to learn how credit really works while being simple and avoiding too much complicated math. It's wisdom that works in the real world. All views expressed are my own and from my experience as a former mortgage professional. Just like your accounting professor won't do your taxes for you, I can teach you how the credit system works, but I can't help you with your credit. On the other hand, what if you do need a professional to help you out? Well, we do have members that can help you. Most real estate professionals can't, or rather shouldn't, try to help you out with your credit because it's just not what they do. You don't really need to understand something as complicated as credit algorithms. You just need to know someone who can understand it. If you need help with getting a good credit score or buying a home, we have a directory of professionals who are ready, willing, and able to help. The directory also has many other types of professionals who you might need along the way. I'm not endorsing any specific company or service, but if that person lists their company on this website, you know they're willing to help you on your journey. And if you don't want to call professionals one by one to explain your situation and see if they can help, you can go to wisecreditprofessionals.com and write one time about the details of your situation, then sit back and let up to 3 of our Wise Credit professionals contact you about how they can help. I show you a lot of screenshots of other companies' websites so that you can see where the information that I get comes from. But the class is considered a new work for education and commentary purposes and therefore does not violate copyright law. Many of the screenshots that I use are directly from the company that calculates your FICO credit score and from the big 3 credit bureaus. We do offer affiliate links, and I would appreciate if you use them, but I also strongly encourage you to use the affiliate links of the other members. When you open accounts with one of these companies, you'll get your own affiliate links offering either cash payments or statement credit, which could add up to over $1,000. And you can see how easy it is to forward the link to this class as well as your own affiliate links to anyone who might need this class. And if you want to see what new opportunities are available since I created this video, you can go to the homepage and click on Options and Opportunities for You. This is where you can find our directory to local professionals and not just someone on the phone offering you a rate they can't actually give you. And you can also find affiliate links to other companies that can help you along your journey. Guys, who wishes I would talk just a little bit faster and make the videos just a little bit shorter? Well, I can. Just go to your settings and adjust the playback speed. Guys, thank you so much. And with all that having been said, let's begin. Proverbs teaches us a good name is to be chosen rather than great riches. Favor is better than silver or gold. Now, what does that mean for us? What I would like to emphasize in that, a good name today can also be equated to having something like a good credit report, a good reputation. What would you want someone to know about you before you meet? That's really what your reputation is. Down here at the bottom, we talk about how a resume is really your work history, and that's what you use to get a job. That's what you put in with a job application is your resume. A credit report is really a debt history. It's how have you paid your debts, and you include your credit report with a loan application. Your credit report is roughly equivalent to your reputation in that it lets people know whether or not you can be trusted to repay a loan. The Federal Trade Commission defines a credit report as a summary of your personal credit history. In other words, a historical document. It also defines a credit score as a number based on your credit history. Experian goes a little bit deeper. It says specifically, a credit score is designed to predict your likelihood of falling at least 90 days behind on a bill within the next 2 years. And one thing that I like to, that I really want to emphasize in this class to my students, credit scores do not consider things like employment status, income, age, race, gender, where you live, things like that. We went over this in lesson 1, but I think it's important to reiterate that things like race, gender, geography, bank account balance, all of those are not taken into account when we factor your credit score. So even my FICO, the people who make your FICO scores specifically say that they do not include those. I want all of my students to know that anyone can get a good credit score if you understand the system and if you do the things that are necessary for you to have a good credit score. You know, in this class, we try to be frank with people and we try to be very direct about certain issues. I did a segment on myth versus reality on this particular subject. I acknowledge, and every professional out there acknowledges, there is a difference in the average credit score among different races. But that's a socioeconomic issue and not something to do with the credit scoring system itself. So I want all of you to know, regardless of race, regardless of gender, that you can get a good credit score if you do the things that you need to do in order to accomplish that and the things that we talk about in this class. Now we're going to talk about a sample credit report. Okay, over here on the side, I debated whether or not to show this, but this is a very long one-page printout of someone's credit report, and it's an example credit report. We're going to see that in a second. It's not a real person's credit report, but Experian was nice enough to provide us with a sample credit report. The different sections in it that we're going to cover: personal information, personal statements, potentially negative items, in other words, bad marks on your credit, accounts in good standing, credit inquiries, important messages, and your rights. So we're going to cover all of these sections so that you understand this sample credit report, but you'll also understand all of the different pieces of information that are included with your actual credit report when you go and retrieve it. So the first section is personal information: name, address, social security number, date of birth, all of those things. So we're looking at John Consumer, okay? Jonathan Consumer, or J Consumer. One thing that I want to mention here is, if this were my credit report, I wouldn't want J Consumer, because unfortunately sometimes that might get mixed up with someone named, and this gentleman's name is Jonathan. It might get mixed up with a Jack Consumer or a Jane Consumer. So I would dispute this and get this off of my credit report, because I don't want to get my file mixed up with someone else named J Consumer. Now we've got addresses. Presumably these are more recent addresses. If they are not recent addresses, in other words, if they're not within the last 2 years, you might consider disputing those off as well. Then down here, social security number. Hopefully this is accurate information, and you can see that Jane, in other words, his spouse or co-applicant, Jane consumer, this would likely be her credit score right here. Hopefully you wouldn't need to dispute those. Year of birth, 91, and any kind of notices down here. One thing that I would mention at this point, in lesson 7, we're going to go over in detail how you can approach disputing different problems like this. This isn't really a problem, but it's something that as a professional I wouldn't want on my credit report. So disputing over here, I wouldn't really recommend that, but however you dispute that, it should come right off. We're going to discuss that, like I said, in detail in lesson 7. And if there are things that you need to take a look at, if there are negative items in your credit report that you need to go more in depth than to just see them and understand them, lesson 7 is very good. But I do an advanced class on what I call do-it-yourself disputing, but it's really advanced disputing. We cover things like Metro 2 and factual disputes in the advanced class. After you graduate, in other words, you need to take the graduation class here on the website. After you take that class and pass the quiz, what you'll be able to have access to is several different, more advanced classes, including do-it-yourself disputing, where you can learn to remove things that are negative accounts on your credit report. So this isn't the class for that, but I wanted to mention that class exists just in case you get confused. Now, one thing that I would mention, I spent a great deal of time shooting that. You will probably get bored to death watching those videos, but if you want to repair your credit yourself, those contain the information that you need. So you'll get bored, but at the end of a couple or 3 hours of watching those videos, you'll know how to do it and know how to clean your credit report yourself. Next, we have a section for a personal statement. Now, some things that I want you to know about a personal statement. You can sit down and write out a paragraph or two, however long you need to, explain whatever happened in your life and your credit to get you to whatever's going on. It's especially useful if you are the victim of identity theft, to include a personal statement, including where your current address is, your current phone number, things like that. But I want to emphasize to everyone taking my class that while it will be seen by somebody who sits down to look at it, it is not seen or taken into account by the computer, by the scoring algorithm, to where it would affect your credit score or an automated underwriting decision. The computer does not see any kind of personal statement that you give. It's only for someone who actually sees your credit report and sees the personal statement and reads that personal statement. So if it gets that far, someone will see it, but really it's not something that's going to affect your credit score. In the next section, we've got potentially negative information. Okay, what is included in that? Well, things like late payments, collections, charge-offs. Over here in our sample from Jonathan, we're going to have let's see here, 1, 2, 3 credit cards. That's the name. In other words, maybe it would say something like Discover Capital One here, the address, the phone number, your account number, type, credit card, terms, revolving. So this would say either revolving or the months of a term loan. Recent balance. This is what you currently owe on this account. $273 as of the statement date. One thing that I want to mention, like we talked about, this is a sample report given to us by Experian. It's not current. These dates are dramatically out of date. Hopefully any kind of account you would have would be within the 7-year mark, or would be within 7 years of the current date. So this 2015, whatever year you're viewing this video, just add a few years to where it would be within 7 years. Okay, your credit limit or original amount not reported. This is unusual, and I don't know that I would have ever seen that when I was doing mortgages and looking at people's credit reports. But this would usually have something like, okay, so down down here we see a high balance of $14,219. Up here, I would guess that the original credit limit, or the maximum that you could spend on this credit card, would be at least 14,500, 15,000, something like that. But they're reporting the highest balance that you've ever had on this account being $14,000, a monthly payment of $10 per month, a recent payment amount of zero. In other words, Jonathan Consumer missed a monthly payment. Now he's past due $20. Okay, there are a few red flags here and a few questions that I have, but my guess is going to be that this gentleman just forgot to pay it this month. Something happened, something different happened in his life. Maybe he moved and missed a bill, because he paid down $14,000 off of this credit card over several years from 2010 to 2015. So my guess is that this is just an accident. Okay, date opened, date of status. So what we've got here, a responsibility individual, what we've got here is a long history of okay. In other words, these have all been made on time, except for this most recent one, which says, and I doubt that you can see it right here, but it says 30. In other words, a 30-day late. If Jonathan continues to be late, it'll say 60, 90, 120, and so on. But I wanted to let all of you guys know exactly what all of this means down here. And currently it says 30 days past due as of June of 2015. So that's what all of this means, and that's how to decipher this entire account. Accounts in good standing. So this is going to be your current accounts, the dates opened, all of the information about your credit accounts. This one right here says Hometown Auto, which gives you an idea that it might be a car loan. Address, phone number. Then up here we've got the account number. Terms, 60 months. In other words, 5-year. This is a 5-year payment. Recent balance, $11,600. The high limit, $19,118. So that means that we don't know exactly how much Jonathan put down on his car, but he borrowed $19,118, making $350 a month payments. And this was back in 2013, so 2 years prior to when the date of this credit report was pulled. So he paid down from 19,000 down to 11,000 over 2 years. So he's doing quite well on this account, and you can see okay across the board. So this account has been paid on time, never late. That's a good account to have. And he's 2 years into this 60-month term, so it's beyond the point that he would have a hard inquiry from having opened a new account. So he's doing very well with this auto loan. Down here, American Apartments, okay. My read of this is that he has his rent being reported to his credit report. That's fine. Like I said, there's nothing wrong with that. But one thing that I want to mention, and I want to reiterate to everyone from lesson 1, and I'm going to keep talking about it, is that these do not count toward your FICO score. So you can have your rental payments put onto your credit report, but it doesn't count as a positive toward your mortgage FICO score, but it does affect other FICO scores, including the more recent FICO 10. So there's nothing wrong with having your rent reported to your credit, and it makes it look like over here we've got a 12-month term rent, recent balance 4,000, so he's probably 4 months away from having to renew his lease, of $12,000, payable $1,000 a month. So $1,000 a month, 12 months is $12,000. Date open back here in 14, date of status, the current date. We have a rental account that's being reported, and it's being reported good. So Jonathan's in good standing with those two accounts. Inquiries. Hard inquiries come from applications. Like I talked about with Jonathan's report, his car loan is over 2 years old, which means that the hard inquiry from when he purchased that car has since fallen off. Inquiries only stay on your credit report for 25 months. We'll get into much more detail in lesson 4, lesson 5, lesson 7, and the do-it-yourself inquiries class in the advanced section after you graduate. But one thing that I want to mention is that it looks like he doesn't have any hard inquiries. He hasn't been applying for a loan, so this wouldn't drag his credit score down at all. Soft inquiries, on the other hand, do not affect your credit score no matter how old they are. It could have happened today and it still would not affect his credit score. Usually soft inquiries come from lenders monitoring your credit report. So one thing that I would mention is that when you have a credit card, a lot of times that credit card company will constantly monitor your credit account to make sure that you're doing okay with all your other credit accounts. If it looks like your credit accounts are getting maxed out, or if you're starting to be late on other credit accounts, that credit card company could reconsider your line of credit and adjust. They could shut your credit card down completely. They could lower your high credit limit. There are any number of things that they could do, but usually soft inquiries, like I said, do not affect your credit. They never affect your credit score, but usually they come from someone monitoring your credit. Right here it says Experian. I'm not really sure why it would say Experian, but that's less than 2 years ago from the date of this credit report. Then down here at the bottom, we're going to have several disclosures. Now, this is good information to have. We're not going to, if you want to pause the video and read it, you feel free. But when you get your credit report, it's going to have certain disclosures down at the bottom. We're going to discuss those here later on. But down at the bottom, it's going to have certain information that's going to be good for you to review. There are three main credit bureaus. I'm constantly referring to them as the big three: Experian, TransUnion, and Equifax. So those are the three main consumer credit bureaus that companies look to get reports from when you apply for a loan. Each of these bureaus maintains a separate credit file or credit report on you. Sometimes each bureau has different information on it, and I want to emphasize that you guys need to manage all three credit files from each different credit bureau. So in other words, just to make sure we're clear, Experian is going to have a file on you, which gives you a credit report from Experian. TransUnion, the same. They're going to have a file on you, which gives you a TransUnion credit report. And Equifax is going to have a file on you, which gives you an Equifax credit report. Now, that means that you have three different credit reports from three different companies. So I want to emphasize that you have three main credit reports, one from each of these bureaus. You know, a good question to ask: how do bureaus get your information? Well, first of all, when you go to apply with a lender, you wind up giving a lender your address, your date of birth, your employer, your social security number, all of that information. Now, when the lender goes to pull your credit file from each of these bureaus, that is possibly new information coming in from you for initiating a hard inquiry. So you actually wind up giving these bureaus information on yourself when you apply. And down here, that counts as a hard inquiry. Okay, once you've opened an account, a lender, whether it's a credit card company, as we saw with Jonathan Consumer in his sample credit report, he's going to have a credit card, a car loan, and an apartment. Lenders report your current details, usually every month. Most lenders report to all three bureaus. Not all of them, but most of them do. So across the three bureaus, your file should be within reason pretty much the same information reported. However, yes, it's entirely possible that different information gets reported to Experian than TransUnion than Equifax, which can wind up causing issues. When you go to apply for a mortgage company is almost always going to check they're going to check all three bureaus when you apply for a mortgage. So basically, what that means is they're going to look at all three, and all three of them are going to have a hard inquiry against you. This over here is taken from the MyFICO app. We're gonna talk about auto loans and credit cards here in a second. And if you were to click this over here, it would show the credit report, or the credit scores, the mortgage FICO scores for this particular person. And if you get that app for yourself, you'll be able to see your mortgage scores right here beneath that. One thing I also want to mention, while you're going through the mortgage process, an underwriter can check your mortgage FICO score more than once. And as I said, they usually use the mortgage FICO credit scoring models. When you go to apply for an auto loan, sometimes they run one hard inquiry, sometimes they check all three. I have heard that Wells Fargo checks all three, but sometimes they only check one. So it really depends on the lender themselves. Sometimes banks will only pull one of your credit reports, which counts as a hard inquiry against only one of the bureaus. So this is one thing that I want to mention, and it's kind of a pet peeve of mine. You'll see that in lesson 7 and the disputing. Dealers oftentimes run multiple credit reports looking for the best financing for you, but the problem with that is that creates multiple hard inquiries. Now, just a little preview of lesson 7 and the do-it-yourself disputing. When you go and apply for a auto loan, that'll count as one hard inquiry, even though toward your score. In other words, your score will only be hurt one time, no matter how many times they run this. So there's a lot of confusion. People will look at their credit report and say, my goodness, they ran my credit score 10 times, or more than that really, but it will only affect your credit score one time. So that's one thing that I wanted to mention. When it comes to credit cards, usually they check one at random. But my observation, and this is my observation, I didn't get this from my FICO or Experian, but it's what I've seen in my experience. Usually they wind up using, and I say a disproportionate number, use Experian. So more often than not, they're going to use Experian. I don't have accurate numbers for you. It might be 50% Experian and then 25-25 for the other two. I'm not sure, but in my experience, Experian is the one that they'll use the most. And they're going to use one of the FICO credit card scoring models over here to check your credit score and lend to you based off of this model. Now, one thing that I would mention, like I said, usually they check one. I know that Capital One checks all three. So some credit cards check all three. Capital One is one of those. Now down here at the bottom, there are new versions of your credit scoring models. FICO 10 is a fairly new algorithm. It's a new scoring model that they think is a lot more accurate than the older models. You're going to see FICO 10T. T stands for trending data. Basically, what that means is they look at your past 24 months worth of payments and account balances. If your account balance winds up going up during that period of time, in other words, you're not paying down your cards, you're spending more, you're accumulating debt, the trending data is going to affect your credit score in a negative way. On the other hand, if you're paying down debt and you wind up owing less over that 24-month period of time, your credit score might be slightly impacted on the positive side. So that's something that I wanted to mention to you guys about the FICO 10T. It's not terribly complicated to understand. It just means that it looks not only at a current snapshot where you are right now, but it also looks at the recent 24 months of history to see whether or not you're paying down or you're accumulating more debt. That's really all that trending means. Now we're going to talk about reviewing and monitoring your credit reports. We're going to start with annualcreditreport.com. Now, I took this screenshot back during COVID. the website changes based on current events. One thing that I would mention, it's slightly complicated to get your free credit report from annualcreditreport.com. This is a website put together. Federal law mandates that the three credit bureaus give you what they think is a simple way to go and get your three credit reports every year for free. So this is a conglomeration of from all three major credit bureaus to give you one website to go to, and this is a verified website. I used it to check mine. We're gonna look at that here in a minute, but we're not gonna look at my credit report, but we're gonna look at the process that screenshots from when I went and pulled my credit report. And it's slightly complicated, guys. When things get complicated, I try to show you the most simple way possible to handle them. Annual credit report is not the most simple way to go in and look at your credit report, but we're gonna talk about that here in a second. Yeah, like I said, it's slightly complicated. These are screenshots from when I went through and pulled my credit report. Which one of the following is a previous employer? I've never heard of automotive, quality curbs, family daycare, none of the above. Well, this one right here, I believe, if my memory serves correctly, this was my mortgage company. So that's what would have been here, but I would have chosen that one. Then down here it says, using today's date to determine your current age. How old will you be in 5 years? Okay. So, like I said, it's slightly complicated, but they get this information from you. Like I said, when you apply for a loan, that's where they get this information from. You report yourself. They use that information to confirm your identity. And I also wanted to mention that this doesn't always work. This is a screenshot from the second time, in other words, about a year later, that I went to annualcreditreport.com and tried to get my Equifax credit report from them, and their response is, we're not able to deliver your free Equifax annual report online. This is the second time I've had problems with them. I actually have an Equifax account. They know exactly who I am, where I live. We were able to verify all the information, and they still didn't want to give me my credit report. So annualcreditreport.com does have some issues. Please don't feel too frustrated if it doesn't work out for you. So like I said, each bureau has a website of its own, and you can go and take a look at your credit reports on each bureau's website. So you create an account on their website, you review your credit report for free, and you can also implement a security freeze or security lock on the website. You can go to Experian.com, TransUnion.com, and Equifax.com, sign up for an account, and review that account online, review your credit report online. And as you guys know, one thing I like to do is bust myths. Things like, I've always heard, everyone says, Aunt Ida always says, blah, blah, blah. Well, over time, and when you hear that enough, myths become accepted as facts. Remember Proverbs 16:23, understanding is a wellspring of life to him who has it, but the correction of fools is folly. In other words, be careful who you try to correct. Sometimes they just don't want to hear it. Sometimes they're not going to listen in the first place. But I'm here to bust one more myth that is going around the internet. The myth is, do you sign away your right to sue when signing up for an account with the credit bureau? If you listen to these gurus, and I would never count myself as a guru of anything, I am a professional. There is a difference. I actually know what I'm doing. Do you sign away your right to sue when you sign up for one of these accounts? The reason that someone would tell you that you wind up giving something away when you sign up for an account is because they want you to use their monitoring service. They want you to use their services rather than get into it and start learning how to review your credit report yourself and how to dispute things yourself. So always remember, be careful who you get your information from. Psalms teaches us, Keep your tongue from evil and your lips from speaking deceit. All of our internet gurus really need to read that verse before they start telling you lies. And the reason that I know that they're lies, let's take a look at what the bureaus actually say. I went through and took a look and read and highlighted the terms of service from each different credit bureau. So right here we've got Experian up here at the top. You can see these are their terms of service, and it says specifically, we each agree to resolve these disputes through binding arbitration or small claims court instead of courts of general jurisdiction to the fullest extent permitted by law. So you are not signing away your right to sue in small claims court because it says through binding arbitration or small claims court. Well, what about TransUnion down here at the bottom? However, we will not require you to arbitrate any individual case in small claims court or your state's court equivalent so long as it remains an individual case. So they will not require you to arbitrate, so you can use small claims court. I'm not a lawyer. You're reading these things. You decide for yourself what it says. Equifax, what's their terms of service say? Well, you see me building a pattern here. You or Equifax may bring an individual action in small claims court as long as the claim is not aggregated. Sometimes I have difficulty pronouncing these words as well. With the claim of any other person. So basically, what they don't want you to do is join a class action lawsuit, but you don't need to join a class action lawsuit to sue in small claims court. So I wanted everyone to understand you can read these contracts yourself. You know more than most of the gurus who say that you can't sue because of the binding arbitration clause. It specifically says you can. And by now, you guys know that I hold myself to a higher standard. What I'm telling you can affect your lives, and I want to be absolutely correct. So, one thing that I want to reiterate is I am not a lawyer, but we read the terms of service, and it's specifically referring to the website and the product and the purchase. But Equifax actually goes on to state in its terms of service that the agreement, in other words, the arbitration clause, all of the things that we just discussed, did not extend to any violations of the Fair Credit Reporting Act. In other words, except that it does not include any claim, dispute, or controversy in which you contend that EIS violated the FCRA. So because we're dealing with very specific legalese, I just wanted to make sure everyone knows what we're talking about. And if you have any questions, or if you are considering suing one of the credit bureaus for violations of the FCRA, obviously first go through lesson 7, and then there's an advanced disputing class. But you can always talk to one of our professionals that you can find on the member directory. We actually have specific category for FCRA lawyers, consumer credit lawyers. So I wanted you guys to know that you can find help. And if you want to go to wisecreditprofessionals.com, you can easily enter your information and have FCRA lawyers get back in touch with you about your situation. So, guys, with that, let's move on. Next, we're going to talk about using the Experian app and Credit Karma to monitor your credit reports. So we're going to set up free monitoring here. Experian has an app that I use myself. This isn't a screenshot of mine, but Experian has an app that you can use that will monitor your Experian credit report for free and give you your FICO score, in other words, your FICO 8. It's not your mortgage FICO, but it's your FICO 8. So 768 is pretty good. We're going to talk about that in lesson 3, but it monitors your Experian for free, giving you your FICO 8, usually has monthly updates or an instant notification if there's a major change, such as a hard inquiry or a new account. And like I said, this isn't mine, but this says that this person has 4 open and active positive accounts, 1 negative, $7,000 in revolving balance, and $94,000 in debt. Credit Karma monitors the other two credit bureaus, so TransUnion and Equifax, for free, but it uses a different scoring model, Vantage Score. There's nothing wrong with this scoring model except that most lenders don't use it. That's why people will tell you, "Oh, it's not a real credit score." It is a real credit score. It's just not the one most lenders use. Most lenders use the FICO 8 score or its rough equivalent. Credit Karma, a lot of times they've started giving daily updates, and with as well as Experian, they'll give you instant notifications of major changes. Now, what are these apps? Why would someone create them? Why would these companies offer these? They get revenue, both of them wind up getting revenue from credit card offers, loan offers, things like that. They basically have affiliate links, just like I do, set up to where if you get a credit card from one of these apps, they wind up getting a small commission. So there's nothing wrong with them. If you want to apply through one of those apps, you can. But one thing that I would always say, don't dispute through these apps. We'll talk about that in lesson 7 and the advanced class, but don't dispute through these apps. It can work and it can get negative information removed, but we'll talk about the reasons that you don't want to dispute through it in lesson 7. And one thing that I wanted to mention, MyFICO recently started offering your Equifax credit score for free and monthly monitoring of your Equifax credit report. With these two apps, you can for free get your Experian FICO score and your Equifax credit score for free. So I wanted to mention that to all of you guys. Now, there are other free services. Most banks will offer you a free credit score every month, and it's pretty much the same one that they get. So you can use, I believe Wells Fargo uses the Experian. Different companies use different credit reports, but they can give you monthly monitoring for free. But I'm not going to go into all of the different companies here. And there are paid services. There are paid monitoring services that you can get. The only one really that I recommend is MyFICO. That's the one that I have for my personal account. And if anyone out there is monitoring their credit report carefully and their credit scores to apply for a mortgage, this is the one that I would strongly recommend using. And if you're only looking for your mortgage FICO score, you can go here, pay a one-time fee. Now it's $30. It might be different when you're reviewing this video, but the way that I like to explain it is that if you pay for your mortgage FICO score, it's kind of like a pre-application fee. It lets you know exactly where you stand with your mortgage FICO score when you go to talk to a lender. So that's one thing that I recommend that everyone do, is to check your actual mortgage FICO score before you go to apply with a lender. In review, we're coming to the end of this one, guys. In review, get your actual credit file from the bureaus. That's what I always suggest. It gives you the opportunity to freeze your credit files. It gives you the opportunity to dispute online, though I wouldn't necessarily suggest that. And it'll let you set up free credit monitoring for all accounts. So myfico.com gives you your mortgage scores. And in this class, I focus specifically on improving mortgage scores, not the other versions of FICO or Vantage Score, although I do mention how things affect your other FICO scores from time to time. We focus on mortgage scores. Guys, you remember Rebecca? For those of you who may not have reviewed lesson 1, Rebecca, this is a stock photo of I'll say a common scenario where someone's young, they're just starting out, they don't always know exactly what they're doing. She has on her credit, let's just say that she went and pulled her 3 credit bureaus. 2 of them have NA, in other words, she has no history of credit. One credit report has a potentially negative account. So that's something for us to look at. But to me, usually in this scenario, it sounds like there was a mistake with the credit bureau and it's something that can easily be disputed. But because of that one negative account, she might have a score in the low 500s. So that's something that we need to take a look at, and we will in lesson 7. Curtis and Angela, this is my cliche couple who is going to be trying to apply for a home loan. But one of the problems that they have is they have a high debt load and they have several potentially negative accounts. So they might have late payments, they might have a bill that went unpaid when they moved. You never know. Small things happen, but it's something to take a look at and get taken off before they go and apply for a home loan. And because of those negative accounts and high debt balances, they probably have a score in the 600s. And for those of you who remember, Charlie's my guy. I gave him as many problems as I could reasonably think of. He's currently suffering from a medical problem. He's currently unemployed. He's getting divorced. He's going through a great number of personal issues. He's behind on everything. He's having a rough time just barely making it. If you're in a position like Charlie, please remember that credit isn't the most important thing in your life right now, and there is a way out. We're going to show you how to do that in lesson 8, but always remember, if you're going through a very rough time like Charlie, joy cometh in the morning. We're going to show you how to get to the morning in lesson 8. And you know I really take this verse to heart. Sometimes God provides people to help you when you really need it. Our professional members participate in wise credit management to serve you by doing what they do best. And remember, you can watch these videos online, but you should also find a local meeting to come and share your difficulties and also your successes. Remember, we celebrate success. I tried to make it easy to find local groups and local professionals on wisecreditmanagement.com. You know, back when I was younger and just starting out, in fact, it was before I became a real estate professional, I found a house that was a really good deal, so I put it under contract. It was being sold by a couple that was getting a divorce and it needed a lot of rehab work. It was a really great deal, and I had a pretty big down payment. So I went down to my bank and they actually said no. And the guy who turned me down was actually kind of rude about it. Luckily, I didn't give up and I found a different bank who would do the loan for me. But while I was building this class, I decided I wanted to make it a lot easier for you to find somebody who can help you. All you need to do is type in some details about your situation, and you can have up to 3 professionals contact you about how they can help you. So whatever your situation is, maybe you've got a rehab that you want to do, maybe you want to get an FHA loan, but you've got bad credit. Whatever it is, you can enter some details about your situation, and we'll help you find a wise credit professional to help get you approved. Well, what if you want to find a great deal like I found, but you're not sure how to go about doing that? Well, what you need is a buyer's agent. What you should do is enter in what you're looking for, and we'll help you find a local real estate agent that can help you find the deal that you need. Just type it in, and we'll help you find a professional that'll work for you. And of course, you need insurance, but really what you want is the best coverage on your home for yourself and your family. And guys, don't be like our friend Charlie and have a major health problem without life and health insurance. Especially if you're buying a home and you have a family, please contact an agent to get yourself proper coverage. And guys, if you have to make major decisions about your retirement account, especially if you're going to withdraw money for the down payment, please talk to a certified financial planner. Also, if you're a freelancer or some type of gig worker, please contact someone about getting a Roth or a self-employed retirement program started. And guys, if you're behind on any of your bills, maybe late fees are being added onto your account, maybe you're considering bankruptcy, please contact a certified credit counselor about a debt management plan to see if you qualify for Chapter 7 or if you need to prevent foreclosure or automobile repossession. It's time to talk to a bankruptcy attorney. On the other hand, consumer protection attorneys specialize in the Fair Credit Reporting Act and suing for violations, so they can actually wind up getting you money out of these companies that are harassing you. And credit repair organizations can help you by professionally disputing bad debt. Many of them are former or even current mortgage professionals who know the laws on disputing and how to get things removed from your credit report. And finally, if you need a reliable and inexpensive car like our class mascot, the Golden Nugget, then you should contact one of our dealers who can help you find what you need. What I want you guys to do is set up free credit monitoring. Get your credit report from each bureau and understand every account that you have. If you don't understand every account, that's something that we need to look into, that you need to take some time and understand. Lesson 7 is going to be good at that, lesson 8 or lesson 9 about identity theft. But I want you guys to understand everything that's on your credit report. Remember to always document your journey. Write down important things, important changes in a journal. Keep all the documents that you have on your credit report in or credit reports in one place. And really, what I want you to think about is creating your own success story. Whatever you're going through, whatever difficulty you're having, or the journey that you're having toward a better credit score so that you can apply for and get approved for a home loan, I want you guys to create your own success story. Remember to join our community. We celebrate success, and I take that very seriously. I look forward to seeing all of you participate in whether it's Facebook or LinkedIn, whatever social media account you guys choose to use, the new X. Whatever social media you use, I'm trying to have an active community in those platforms. So join, like, especially if you're on YouTube, always subscribe and like. But join our community and celebrate success. And one thing that I always want to mention, do you know anyone who needs this particular class or to learn something from any one of these lessons? Do you know anyone who could benefit from this? If you do, obviously all of you guys know how to click the share button and text that to them or email it to them, however you get in touch. But all of you guys understand the importance that I place a premium on sharing this class with people that you know and care about. Share the information, the knowledge is free. And remember, success is overcoming. Focus on your goals, not your obstacles. To overcome, you get started, you develop your goals, and you use the wisdom and the knowledge that you learn here to benefit yourself, to benefit your family, to build your future. A preview of Lesson 3, How Credit Scores Work. In Lesson 3, we're going to talk specifically about credit scores. We already showed this slide before, but we're going to talk about credit scores. We're going to talk specifically about why lenders use credit scores. And you can see over here, just to preview, if you have under a 600 credit score, however, if you have an 800 credit score or higher, you have a 0.7% chance of being delinquent. That's why lenders use credit scores. What's a good credit score? Well, our friends from Experian give us several categories from exceptional over 800, very good 740 to 800, good 670 to 740, fair 580 to 670, and poor really under 580. And we're going to talk about the factors that make your credit score: payment history, utilization, length of credit history, new credit, and credit mix. And I'm going to present you with a detailed breakdown of the MyFICO. It's not the exact scoring model, but it gives you a very good idea of how much different things affect your credit score. So I look forward to seeing you in Lesson 3, How Credit Scores Work. Thank you so much for joining, and may God bless you.